spoke about stock-specific news. Let's get to market fundamentals now. Santosh Singh, who is the fund manager at Motilal Oswal Asset Management, is joining us now to discuss the way forward for the markets. Santosh, good morning. Thank you so much for joining in. Well, give us a sense of how you've looked at the earnings so far. We are halfway through. And do you think something stood out and something that you think at these levels is looking attractive?
So the earnings season per se was not in line with expectation. It was slightly lower because what we saw was that the consumer side of the business or consumer side of the market has shown a bit of weakness, which is visible in almost all the consumer company stocks, consumer company sort of results, right? So that was one. Secondly, what we saw was the stabilization happening in the IT space and in the banking space. The stability was coming per se in IT and banking, but the unsecured side of the business in banking has been doing tremendously badly. So that was the another highlight which came through, right? And what you are also seeing is that barring few companies, the order inflow is now not growing the way it was growing in the past. So clearly, all in all, what we are looking at is maybe a downgrade happening for the year in Nifty estimates for the market. And that's what we are seeing in the stock market.
By the way, some numbers coming up from ABB in the conference call. The volumes may plateau before a jump up from the market. The stock is under pressure. It's been down 5.5%, and it slipped after the conference call began. We'll connect with Vamakshi. She's been listening in to the conference call, and she'll join in with the key takeaways. So Santosh, can you give us a sense whether this downgrades, the earnings weakness that we've seen, will persist for the next 2 quarters, at least for FY25? Is it possible that in Q3, Q4, we will continue to see earnings downgrades? Can this spill over into FY26 also? What is your own assessment?
So see, the estimates are pretty high, right? We are talking about closer to 13-14% sort of growth rate. As of now, I think there will be a cut by the end of this quarter, but we are talking about those sort of numbers. Right? This year, a double-digit number, I think, is looking difficult from an earnings growth point of view for the market as a whole. So that's this year is slightly difficult, I would say. Next year, given the cut which is going to happen, I think we are going to see some cut in Nifty estimates even for FY26. So, but not as sharp as what we can see in this year, because there are some counterbalances which are there in the next year. But yeah, earning our downgrade cycle is one thing which we have not seen for last 2-3 years, and then the new investors are not accustomed to earnings downgrade. So I think
you're saying double digit is difficult this year. So is it possible that in Q3 and Q4 also there will be earnings downgrades to come to this eventual 8-9%, or will it be lower than that? And what about FY26? Again, estimates are that it will be double digit. Is there a risk to that?
So see, it depends. If people downgrade to 7-8% in this quarter itself, there won't be any downgrade. But if they are going to do it gradually, then yes, there could be a downgrade in Q3 and Q4 as well. Because it all depends on what everyone is doing. But yeah, means what we are seeing today and what might happen there is a gap of 4-5% in the earning estimates. And that's where next year also we could see a couple of percentage point downgrade, which people may start doing it in this quarter itself. That's my view. But let's see how it plays out. I'm not seeing a big downgrade for next year, but this year it's quite big.
Okay, so this year could see a bigger downgrade versus what we would see next year. Santosh, any pockets or any sectors which you think have come back to reasonable levels, or something that you would like to invest in?
So, see, the sector which is quite reasonable, and I've been saying for the last couple of months, is banking, actually. That has not done anything for last 3 years. We have been underweight for a very long period of time. And I think it's one sector which clearly seems like where the numbers might have bottomed out, because the net interest margins might have bottomed out or will bottom out in next 1 quarter. So, and the sort of valuations are either below average or closer to average for this particular segment. So that's one segment I would say I would watch out for.
Okay, all right. So banking is one. And what are you making of some of these NBFCs, Santosh? We have been talking about that pain coming in microfinance. We're talking about some issues there. Do you think some of the NBFCs would stand out in this case?
So what we saw after sort of COVID was that I would say the NBFCs or the unsecured side started showing so much of growth. And that is what is causing pain for a lot of NBFCs and the MFIs, the unsecured side of the business. So that way, and then the good part with the unsecured side of the business is they are sort of short duration products. And given the RBI's focus, I think you will see earlier what you could have seen if the RBI was not so much focused, what you could have seen was that this could have gone on for 1 or 2 years. But the sort of focus which we are seeing from RBI to contain this issue and do it as fast as possible, we might see that in 1 or 2 quarters, everything can get provided for.
Santosh, thank you very much for joining in. Hope you had a good Diwali and wish this coming year brings all of us a lot more good health, happiness and prosperity. Get into a break. We'll come back and discuss commodities. We'll invite Manisha Gupta on the show.